Market shrug off opening lows on the penultimate day of 2024. The Sensex and Nifty moved to the day's high led by financials and pharma stocks, even as IT and auto stocks lagged. Mid-caps outperformed.
US President-elect Donald Trump says he's a believer in H-1B visas, backing Elon Musk's stance. Musk has been batting for H-1B visas, saying it benefits the country. Trump's endorsement is a positive for Indian IT.
JSW Energy's arm JSW Neo snaps up O2 Power with nearly 4,700 megawatt of renewable capacity for about 12,500 crores. Analysts give a thumbs up to the deal.
Ola Electric's Chief Marketing Officer and Chief Technology Officer resign in one go and with immediate effect, bringing to fore the internal challenges at the EV maker that has been losing market share.
And 3 new listings on D Street today. Syneris Pharma and Ventive Hospitality see a strong debut, list at a premium against their issue prices, while Carraro India lists at 8% discount.
Good afternoon, you're with us here on Halftime Report on CNBC-TV18. I'm Hormas Patakia and with me is Anuj Singhal. Anuj, good afternoon. I guess looking to compensate for the heartbreak in Melbourne, the markets are showing some bit of upside in today's session, but still the range remains the key.
Oh, absolutely, Hormas. And you know what, slightly heartbroken actually, especially given that, the second session where we didn't lose a single wicket and then post-T to lose 7, one questionable decision, I guess, as well, but that's part and parcel of the game. I think sometimes, you need a defeat to sort of make the changes that you need. If today, you would have somehow drawn this, then perhaps things would have not changed. I'm hoping that things change now. But anyway, that's a hope. Anyway, for the markets, things are changing and changing quite fast. Today, at one point, when I was sending my graphics, it looked like it was another one of those days where the market was going to be in a range. But look at what's happened in the last 1 hour. And this is Nifty and Bank Nifty. I'll just see the intraday charts of both Nifty and, more importantly, Bank Nifty, and that would tell you a bit of a story. Let's pull out the intraday charts of Sensex, of Nifty and Bank Nifty, and then we'll see the contribution play. That's the contribution, and it's really the two big banking heavies that have done the trick, ICICI Bank and HDFC Bank. The way they have sort of taken Nifty higher and Bank Nifty to the highest point of the day. Now, keep in mind, Hormas, I again, repeatedly am saying this. This is a market in which the volumes are on the lower side, especially from the FI desk, and the real equilibrium for the market would be known from next week. And this week, there's a possibility that the markets, if nothing, at least make an attempt towards the equilibrium, which is mean reversion trade of 10 and 20-day exponential moving average, which is placed somewhere around 24,100 thereabout. But the real test would emerge from next week.
It's been stuck in that range, right? 23,800 to 600 on the downside, 24,300 on the upside. That's what has been the story of the market throughout the December series and a better part of the last week of the year as well. But there has been no dulling in the primary market activity. They continue and they continue gear abandon, I guess. There were 3 more listings that took place today. Syneris Pharma, Carraro India and Ventive Hospitality. All of them made their debut today. And Vamakshi is here with more details on them. Vamakshi, good afternoon.
Syneris Pharma is the first one that I'll be talking about. They had a stellar listing because they listed at 600 rupees per share, which is coming in at a 53% premium to their issue price. The company is a global research-driven pharma company. They focus on cardiovascular, diabetes, gastroenterology, and critical care injectables. The company manufactures products at its FDA-approved facilities, and they have a very significant presence in the markets like US, UK, as well as Canada. In addition to that, they also offer contract manufacturing services and is also vertically integrated by producing its own API. In addition to that, they're also expanding their presence in emerging markets. They're increasing their R&D capabilities, and they plan to drive growth ahead through acquisition and expansion of their manufacturing facilities. But when you look at the company's valuations, it seems like it is trading at a premium to peers like Ajanta Pharma, Gland Pharma at the issue price of 600 rupees per share. The price to earnings ratio stood at 58 times, which is much higher as compared to some of its peers. Ventive Hospitality is the other stock that listed today. The company listed at 716 rupees per share, which is coming in at an 11% premium. Keep in mind that this is the company is a hospitality asset owner with Marriott, Hilton, Minor and Atmosphere hotel brands. They have a portfolio which comprises of 11 operational hospitality assets, both in India and Maldives. They have total keys of somewhere around 2036 across luxury, upscale and upscale segments, and the plan is to increase it to 2403 by FY28. In addition to that, they also have 3.4 MSF of commercial space that yields rent with 95.55% occupancy. Lastly, let's also focus in on Carraro India. They listed at 651 rupees per share, which is coming in at a discount to its issue of nearly 8% to its issue price. The company specializes in manufacturing of components ranging from small gears to complete tractor assemblies. They have 2 manufacturing plants in Pune. Some of its key customers include Mahindra, Action Construction Equipment, Volvo, among several others. But a weakness that that the company has a high dependence on very few customers. For top 10 customers accounting nearly 85% of its revenue. And the company very recently joined us, just a short while ago, and they say that they saw some slowdown due to elections, but they're not anticipating a very big recovery in the second half.
No, Babakshi, thanks a lot for that. Carraro India is the first listing since almost Suraksha Diagnostics, which is around 8 or 10 listings ago, that has listed at a discount from their IPO price. Of course, we had 5 listings on Friday itself, but a listing at a discount nonetheless for Carraro India. Earlier, we spoke to the managements of both Senors Pharma and Carraro India to understand the company's post-listing strategies and their growth outlook. Listen in.
For FY25, we would continue our growth trajectory that we have shown in the past, and both on the top line revenue side as well as on EBITDA side. So it will be better than the industry averages, as I've been talking about, and you will see in coming days in terms of what kind of growth that companies is endeavored to companies going to achieve. The growth likely would be coming from our CDMO CMO space in the US as we speak. We've signed multiple deals with large pharmaceutical companies, which will give us a massive tailwind on the CDMO CMO side of the business. As well as we have about 51 products that are in the pipeline. Some of them are already filed, some of them are going to be filed, and so on and so forth. These are niche opportunities. They are large CGT portfolio that we have will further continue to grow. We are looking at multiple product level acquisitions in the US and outside US as well to add to our current offering in the market. Again, our idea is not to acquire those products and launch a generic version of it. We'll again create some uniqueness around it, launch a novel strength or a combination of a product, and then launch it in the market. On injectable side, as we speak, we will start the construction. I think in next few months we'll form up our plans in terms of establishment. Product development is already started, so there are a lot of products we are currently working on the injectable space that we want to do it in the US market. So as the product development will happen, we also want to acquire few products on the injectable space as well.
This year has been a year of election, so there has been some slowdown in the construction side because tenders don't get released during those period. But the monsoon has been very good, so we feel that things are going to improve and the future is bright. We are not looking at a very big recovery in the second half. The first half has been reasonably good. We are also in a way getting impacted by the markets in US and in Europe, which have not been very, I would say, exciting in the last 6 months. Today, I am very happy to share that the audited result of September closing has given us an EBITDA of close to 11%. So we have already reached a solid double-digit EBITDA, and we are, I would say, the journey has just been completed half. We have accomplished half of the EBITDA that we are planning for future.
The management's in conversation with us after their listing. Time for a short break. Up next, we focus on Gujarat Fluorochem, which is under pressure post a gas leak at its chemical unit. Stay tuned. We'll be right back.
Welcome back. A couple of stocks in focus. HDFC Bank clearly now taking over the leadership mantle in terms of that move on Bank Nifty, that's moved to the highest point of the day. And IndusInd Bank, remember, it's been the biggest loser of 2024. But over the last few days, it's shown some signs of a comeback, especially after that announcement about its MFI portfolio. So that stock's been doing well, up about 2%. But Gujarat Fluorocom is under pressure after 4 workers died in a gas leakage incident at its Dahej plant. Upasna is here with more details. Upasna.
Well, the stock remains in focus today due to an unfortunate incident. Well, a gas leakage has taken place at the company's Dahej plant in Gujarat, which has led to death of 4 workers on 28th of December is what the company has indicated. And the gas leakage is mainly caused by a valve that released toxic gas leading to death of workers. As a result of this incident, the operations at the plant are temporarily disrupted. Now, further, the company has also said that all the assets are adequately covered under the insurance policy. And now let us look at the company, beg your pardon, a recent data released by the government stating that the number of gas and chemical leakage accidents in India has more than doubled to 30 in the last decade, with Gujarat accounting for the majority of incidents in 2023. So that's one more data point to look into in terms of such events. Well, that's the reason we can see the stock tanking in trade today.
Oh, absolutely. Unfortunate incident over there, but the stock's down about 3.5%. Let's move on then. And HDFC Bank and Siemens India are in focus on the back of Chris Wood's latest Greed and Fear note. That's his weekly column that he writes. And Hormaz, my co-anchor, will tell me what Chris is writing this time. Hormaz?
Chris has turned bullish again on HDFC Bank, and it's become a part of his Asia ex-Japan long-only portfolio. And he's introduced that weightage on HDFC Bank with a 4% weightage there. And he will introduce that investment in the Asia ex-Japan long-only portfolio by trimming his investments in 4 stocks, which is Macrotech, L&T, ICICI Bank, and Axis Bank. Now, for the India long-only portfolio, where HDFC Bank is already a part of, that will see an increase in weightage for HDFC Bank by 1 percentage point, and that will be done by trimming investments in Axis Bank. Now, that's the story for HDFC Bank. It's not had a very good year, but still is going to end with positive returns. Of course, we spoke about this last week. But for Siemens, that stock has been in the news all through last week. It was almost a 15% drop that the stock had in the week gone by after some management commentary over with regards to its outlook. And even there, Chris Wood has turned positive. He'll be introducing that investment with a 4% weightage both in the Asia ex-Japan and in the India long-only portfolio. Now, for the Asia aspect, the portfolio, this investment will be introduced by trimming the stake in the preferential shares of Samsung Electronics and also by trimming stake in SK Hynix, which is one of the leading semiconductor manufacturing companies in South Korea, by 1 percentage point. And for the India long-only portfolio, that 4% investment will be introduced by completely removing the investment that has been seen in AU Small Finance Bank. So Siemens and HDFC Bank is where Chris Wood of Jefferies has turned positive. Even both of them have not had a very good year, Siemens being a bigger underperformer compared to HDFC Bank.
Oh, absolutely. Well, let's do one thing then. Let's take a break now, and up next we'll get Shivangi Sarda of Motilal Oswal Financial Services with some trading ideas.
Back with us here on Halftime Report. The Nifty is back off the highs of the day now. 23,916 was the high. It's around about 60 points off the highs of the day. Is the index still holding on to gains of about 50 points? But there are plenty of movers within the broader markets. And there's a lot of stock-specific activity that's going on. AstraZeneca Pharma is one such stock. Now it's up almost 8% as we speak, and on very high volumes as well. Almost 2 lakh shares have already been traded on the stock, which is almost 37 times the average daily volume that it has. Almost 8.5% now is AstraZeneca. The other one is Happiest Minds as well. That stock is now up almost 9% and also on very significant volumes, which is around 12 times its a daily average. And it was a significant spike that you've seen on Happiest Minds over the last few minutes of trade, over the last hour and a half or so. That very sharp spike that has come in on Happiest Minds. And the other one is an underperformer, Credit Access Grameen. That stock is up around 7%. and it's been a big underperformer, although off the highs of the day, still holding on to gains of around 7%. The stock is a big underperformer because it is down almost 55% from its peak, which was around 1800 rupees. Now from there, the stock has now cooled off. As of yesterday's closing, as of Friday's closing, was down almost 55%. But what next for the index? Some trading strategies for the afternoon. And to tell us that, Shivangi Sarda of Motilal Oswal is joining in. Shivangi, good afternoon. Thank you for joining in. Still stuck in that range is the Nifty. Do you see this range breakout that is taking place above 24,000 before the start of next week, before FIIs return to trade full-fledged? Or do you see this meandering in this 200-point range continuing? And couple that up with your stock recommendations as well.
Very good afternoon, Thomas. Thank you for having me. So we've seen that, January series is anyway a little tricky and a little difficult for the Nifty index. We've seen that historically from the last 10 to 12 years. Now, index has been consolidating in a very narrow band in the range of the previous Friday session from the last 5 sessions. And this clearly indicates that there is some sort of indecisiveness because there's multiple doji formations there within. So somewhere the index has got stuck in this range, and there is a tug of war between the bulls and bears. Now bears are facing some sort of difficulty here. There is pressure at the higher zones, but support-based buying is also intact. Now India VIX has also cooled off, but again we are witnessing some very narrow band consolidative mood. So overall, we're expecting the index to remain, choppy in this manner, and 23,500 would be an important positional support here. And 24,000 is where we are seeing a lot of call writers. So unwinding has to happen at these levels for the next fresh leg of rally. But we don't see a major pain point from these levels. So these are the 2 levels that are important to watch out for Nifty. Now, my suggestion would be to go for a range-bound strategy or a strategy which could be hedged because of the swings and volatility that we are expecting in the next 2 to 3 weeks. Now, talking about Bank Nifty, we've seen that this is more or less in line with the broader market, but there are swings here more than the Nifty index. Now, this is also struggling to hold above 52,000. Once it crosses and holds above this mark 52,000 level, then we could see strength from the heavyweights now supporting, especially the PSU banking space. Till then, there will be some sort of choppiness here as well, but we could do a buy on decline here for Bank Nifty with a support of around about 51,450 levels and the upside targets towards 52,500 zones. Now,
Shivangi,
talking about stock.
Yeah. Sorry, Shivangi,
Yes.
good afternoon. I was asking you about your stock ideas. Yeah.
Yeah, hi Anush, thank you. So talking about stock specific idea, my first pick on radar would be Paytm. This has been a stock which has been resilient throughout the ups and downs in the recent times. And this is one stock which has consistently moved from the last 6 months, making higher top, higher bottom. Recently, we've seen that good amount of volumes are also being added here from the last 5 trading sessions. RSI is also turning positive for this one. So Paytm is one stock which is definitely looking quite positive and recommending a buy here with a target of 1,050 levels and with a stop of 995 levels. So this would be the first one on radar. Anyway, digital India stocks are looking quite positive. So this is one theme which one could focus on in this kind of uncertainty as well. Now, the second pick is from the, diagnostic and pharma, which has been taking a lead from the last 2 series. And we've seen that IPCA Lab has come out of its consolidation of the last 11 weeks, breaking through its higher band. Now, remarkable follow-up can be seen after the breakout recently. And we've seen good rollovers here as well. With the pharma also having a good, breakout over here, there'll be a lot of sector tailwind in this stock as well. So recommending a buy here with a target of 1720 levels and a stop of 1610 zones.
Okay, so that's the calls that Shivangi has. Shivangi, thanks a lot for joining us today with those calls. Okay, before we take a break, Horma's quick question. I guess who retires today? Rohit, Kohli, both or none?
if I get an option to skip a question, I choose to skip this one.
That's a good one. Safe way out. With Indian cricket, you never
I left the ball, which usually they didn't do.
Absolutely, absolutely. Someone just showed the kind of bat Virat Kohli should have been using, with no wood on both sides. We'll take a break. Once we come back, of course, we'll talk more about market and some stock-specific action. Welcome back. Let's move on then and address a sector that's IT. Goldman Sachs is bullish on the sector and expects 7% revenue growth in FY26, while Investec is bearish and believes the risk reward is unfavorable. Reema Tendulkar now joins in with more details. Reema, good afternoon.
Hi, good afternoon. So as you rightly pointed out, on one hand, you've got Goldman Sachs, which is constructive on the tech sector going into next year, but you also have an Investec who believes the risk reward is currently unfavorable, and we could see marginal earnings downgrades too. So let me first start with Goldman Sachs, which is the bullish note. Now they're talking about a 7% top line growth in FY26, which is a pickup compared to 4% in FY25 and a 1.5% revenue growth in FY24. Now this revenue acceleration is driven by the US economy being strong. That's 60% of your revenues. Then sectors like BFSI, consumer tech also doing pretty well. Even the US banks, which are basically clients of the Indian IT companies, have been talking positively. Accenture numbers were strong. And even the Goldman Sachs IT spending survey seems to suggest that the spending environment is turning far more optimistic. That said, just in the near term, Goldman Sachs does acknowledge that there could be revenue and margin pressures driven by company-specific factors. So particularly for TCS, they're talking about headwinds to TCS's revenues in Q3 because of the ramp down of the BSNL deal. For LTIMindtree, there could be a wage hike which will impact the margins, etc. But they believe that most of the pressures will be in the stock price once the Q3 earnings are done by middle of January. Also, they acknowledge that valuations are elevated and Europe is a bit of a pain point. But on the whole, Goldman Sachs is constructive. They are expecting revenues to accelerate. Investec, though, believes the risk reward is unfavorable. They continue to see a potential for a results downgrade. They argue that IT stocks are trading at peak premium valuations over Nifty despite a lower growth. The deal wins have weakened. In the entire pack, they like Zensar and KPIT Tech. Back to you.
Interesting. Reema, thanks a lot for that. The IT index is up 23% this year, was up 24% last year. So healthy returns continue. 2022 was the only year in the last 5 that the index had delivered negative returns. Actually, in fact, the only negative year since 2017 that the index had delivered negative returns. So good going for the IT names, but 2025 will be the one to watch out for. Now, moving on, the other one that's buzzing in today's session though is JSW Energy, and that's because the company's arm JSW Neo signed definitive agreements with O2 Power to acquire almost 4,696 megawatts of the renewable energy platform. The brokerages are also bullish on the stock. Vivek is joining in with more details on that. Vivek.
Well, that's right. Like you mentioned, JSW Neo is going to acquire close to 4.7 gigawatt of renewable energy. This is from the O2 platform that is currently being run by PE investors. This particular deal has been done at an EV or an enterprise value of close to 12,468 crore rupees. Now, brokerages, like you mentioned, are quite upbeat given the fact that this particular deal has been done at an attractive valuation. So, Axis Capital maintains an ad. They believe that the locked-in generation capacity for JSW moves up from 20 gigawatt to almost 25 gigawatt per post this particular deal. Remember, the target EBITDA of O2 at 3,750 crore that the company has indicated amounts to almost 71% of JSW's FY24 consolidated EBITDA, and the equity upside as per Axis Capital works out to almost 35 rupees a share. Investec believes that this particular portfolio could be valued at close to 18,000 crore rupees, where the equity value is 8,000 crore after adjusting for the debt which the company has or the platform had as close to 10,000 crore. So on the back of that, they see potential upside of close to 45 rupees a share. What is it that Motilal Oswal are saying? They are the most bullish amongst most of the brokers. They are saying that the O2 Power acquisition unlocks value. Acquisition of 4.7 gigawatt renewable asset at 7 times EV to EBITDA unlocks close to 57 rupees a share. As far as JSW Energy listed arm is concerned, interest cost for O2 Power is 8.8%, which is competitive and at par with JSW Energy itself. So, all in all, a good deal at attractive valuations, which is why brokerages are bullish.
Indeed, Vivek, thanks a lot for that. In fact, Motilal Oswal had another interesting point to make that, in fact, once the KSK Mahanadi deal is approved for JSW Energy, that could lead to further value unlocking of another 60 rupees a share after this acquisition that JSW Energy has done. In fact, we spoke to Sharad Mahendra, who is the joint managing director and CEO of JSW Energy, and listening to what he had to say.
That we are getting a very, very high quality asset, and which is close a total at a built up to 4.7 gigawatt of capacity, out of which by June 25 almost 2.3 gigawatt will be operational. And as we are aware of wind build of around 8 to 8.5 crores per megawatt. And then we see that what is that turns to for 4.7 gigawatt. We have found this very, very attractive. The H1 was exceptional in terms of two factors. One, the elections, which stalled the investment which was going on, especially from the government side and also the private investment. And we saw government spend a decline, marginal decline, as if we compare with H1 of last fiscal. So, but yes, and then the extended monsoons which were there. These were the two factors. But we have seen in last 1 month, especially last 2 to 3 weeks, the demand as well as the tariffs have started going up significantly, what we have seen in Q2. And we are absolutely certain that demand pickup is there. And the tariffs also are moving upward. And that is purely the demand supply scenario. And once the demand is picking up, the tariffs also, we are quite certain that will be inching upward only. I am happy to inform that we have just 2 days back, we have received the consent to operate letter. And we have just, the unit has been lit up, and maybe it's a matter of few days that the synchronization of the unit will also happen, and the COD. I'm happy to announce that as we have been maintaining that we'll be close to 10 gigawatt with our greenfield projects which are getting commissioned by year end. We are on track of that. And over and above this, with this O2 acquisition and operational capacity current, and by June 25 reaching 2.3 gigawatt, and once the KSK process happens, I'm happy to tell that by June 25, we will be definitely exceeding significantly the 10 gigawatt number. Barmer, our plant is running full. In terms of expansions, the government of Rajasthan has to come out with the requirements. They are contemplating, because Rajasthan is one of the states where the power demand is growing more than what the national average is. And the power demand projections which the state has done, because recently the Rising Rajasthan Summit, also when the discussions happened, that the demand, the way Rajasthan is growing and focusing on make in Rajasthan, and with industrial policy, which has favorable industrial policy, which has come up, I think the demand growth is going to be significant.
JSW Energy, one of the stock movers in today's trading session. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back. Just at the start of the show, we were talking about a Nifty moving higher to the highs of the day. But within half an hour, the index has now slipped into the red. That's the kind of volatility we have seen towards the last few days of the year. Of course, we've been saying this all through last week and this one as well, that volumes remain low, participation remains low, and hence any move can be exaggerated as well when it comes to the indices or even specific stocks for that matter. So back in the red is the Nifty, back at that 23,800 mark, continues to face resistance between 23,900 to 24,000. A couple of stocks that I wanted to highlight, KRN Heat Exchangers is one of them, and that stock is now at the lowest point of the day, almost 4% down on the stock, and that is because its 3-month lock-in period has ended in today's trading session. So that has freed up around about 2% or 4% of its outstanding equity there. And also pull up Enviro Infra Engineers, that is also a recent listing, And there as well, 3-month lock-in period has come to an end, 5% lower for Enviro Infra as well, and that has freed up almost 37% of its outstanding equity. Mind you, shareholder lock-in ending does not mean all of the shares will be sold in the open market. They just become eligible to trade. So that's Enviro Infra for you. Mind you, KRN Heat Exchangers has tripled from its IPO price already. There was a 210 rupee IPO price, and the stock is almost at 710 now. And Enviro Infra 2 has doubled from its IPO price, 148 rupee IPO price for Enviro Infra, and that stock too is trading close to levels of 300 rupees. But moving on then to our series of year-enders, and we focus on banks as they face new challenges in 2025. Loan growth is at a 3-year low. Incremental credit deposit ratio is low. Now, will 2025 mark the test of leadership at lending institutions as liquidity remains tight? Abhishek is here to decode how will 2025 pan out for the banking sector.
Well, 2024 will end as the best time behind for the banking sector. 2025 will mark the test of leadership at lending institutions as liquidity has remained tight. Asset quality has started to see deterioration. Thus, there will be pressure on net interest margin and return ratios like ROA or return on asset. So, incrementally, if you take a look, the loan growth is at 3-year low, and incrementally, the credit deposit ratio is at 3-year low too. So, even if you exclude the SDFC Limited numbers, the credit growth in this year so far has been one of the lowest in last 3 years, and the CD ratio is also at 3-year low. Now, deposit growth will be a key challenge because government spending needs to pick up for deposit growth to pick up as well. High inflation is keeping customers away from lenders. Managements are saying that corporates are wary of the high interest rates in high inflation scenario. SIP flows continues to be strong from retail segment especially. As per November data, the retail SIP has remained stable and on the higher side. Robust small cap investments have been done by retail investors. Now, what lies ahead? Managements do say that microfinance pain will continue till later part of 2025. Now, with asset quality getting over with respect to the pain in H1 CY25, it's the liquidity crisis that will slow down the loan growth for MFI players. Now, over leveraging is a key concern over there, which will cause huge pain in this sector. Unsecured loans have started to see pain. So many lenders have seen or bled in their Q2 FY25 results asset quality. Slippages are coming in from unsecured lending. We may see that pain continue in H2 FY25 as well, which has been highlighted by higher credit cost guidance given by lenders for the second half of financial year 2025. With growth in unsecured loans being tapered down by regulators and lenders following the same, many lenders who have been focusing on unsecured lending like IDFC First Bank, RBL Bank, small finance banks especially may see pressure on their return ratios as well. So the big area of focus will be the rate cut from the regulator. Inflation has been high and sticky as per economists. One can expect shallow rate cuts ranging from 50 basis point to 100 basis point in calendar year 2025. With lending rate cut being done, banks can see pressure on their net interest margins as lending rates will reduce for them immediately when the rate cuts happen. So while NBFCs may see improvement or stability in their net interest margin because their cost of borrowing from the banks will incrementally reduce, which is one of their key borrowing segment right now. Now, management terms are expected to end in 2025 for these banks like IndusInd Bank, Indian Bank, you have Bank of Maharashtra as well. Also, for Central Bank of India as well as Punjab and Sindh Bank. Over the last few years or 6 years or so, the gross NPA ratio difference between the PSU banks and private banks have narrowed from as high as 967 basis point to about 127 basis point at the end of calendar year 2024 so far. Similarly, the net NPA ratio difference has narrowed from 451 basis point that you saw in 2018 to right now about just 11 basis point in 2024 so far. Historically, this is one of the lowest net NPA ratio difference seen between PSU banks as well as private banks. So from CY 2018 to CY 2024, PSU banks gross NPA ratio has declined from 14.2% to about 3.15% and net NPA ratio has declined from 6.25% to 0.62%. Private banks, their gross NPA ratio has declined from 4.5% to about 1.9%, and the net NPA ratio has declined from 1.74% to about 0.5%. Will RBI change its stance on lenders? Now, RBI has banned many products or entities in 2024. So, RBI did ban, Kotak Mahindra Bank's onboarding of customers via the digital and mobile customer application, as well as they have placed limits on the credit card business due to deficiencies seen in Kotak's IT infrastructure. Now, RBI had raised material supervisory concern on Asirvad MFI, which is a subsidiary of Manappuram Finance. RBI intends to implement the expected credit loss guidelines from 1st of April 2025 to ensure that there is bank's financial stability, protect depositors' interest, assess the overall risk exposure and accuracy, reflecting the true value of bank's loans portfolio. Now, project financial, there may be additional provisions over there, as RBI has stated in their draft regulations. So, this will be implemented in a phased manner, 2% by 31st March 2025, 3.5% by 31st March 2026, and to 5% by 31st March 2027. RBI has given new draft norms which states to increase the bank's liquidity coverage ratio by an additional 5%. Now, the runoff factor for retail depositors is a key cost, and this will also see that who are enabled with internet and mobile banking, that will see additional incremental over there. So, it may come into effect from 1st of April 2025 and may lead to, short-term slowdown in credit and impact the net interest margin of the lenders on the negative side.
Abhishek, thanks a lot for that. Indeed, banks will be the sector to watch out for in 2025. Time for a short break. On the other side, Manisha Gupta joins in with Surendra Mehta, the Secretary of the India Bullion and Jewellers Association. Stay tuned. Back on the other side.
Welcome back, and joining us now is Surendra Mehta. He's Secretary at India Bullion and Jewellers Association. Mr. Mehta, hi, thank you for joining us. Well, in fact, the end of 2024 and all that we're doing right now is putting out outlooks for 2025. But 2024 was an exceptional year. We've seen record highs. We've seen prices gain up between 28 to 30% in various currencies. And the World Gold Report also says that we've seen 40 record highs, a string of that in 2024. Do you see 2025 building up on this?
Well, I see 2025 is going to be not a very good year for the precious metal industry. We'll have to understand 2-3 important things. First is the US will be now run by the new president, and so there are going to be new tariffs. The US started their debt with 34 trillion on 1st January 24. Now they are up to 36 trillion debt. Out of total revenue of 4.92 trillion, they spend almost 1.12 trillion only on repayment of interest, only on payment of interest, forget about repayment of debt. So the entire 2025 will be based on dollar index, how the dollar performs, how the US economy performs, what are the major decisions taken by the US government. So I think precious metal industry is going to be extremely volatile, and one may not see the kind of returns which precious metal industry has seen over the last 3-4 years. In my opinion, in a nutshell, I can say that honeymoon period for precious metal industry post-corona is getting over.
All right. So would that mean that 2025 could be a year of stability, accumulation into these markets there? Because the industry over by itself does say that you would be looking at expansions, that they're looking at more stores as well. When you say 2025 is not the year of precious metals, do you mean that in sense of prices, or do you mean that volatility for the industry in sense of profits?
Well, I mean volatility in terms of the movement of precious metal prices. As I can foresee, the precious metal prices can go as high as up to 3,000 $200 to $250 in 2025, but there can be a steep fall to almost $2,100 to $150. So if so almost 33% to 35% down from the top. And what I foresee is that initially for the first 5 months or 6 months or maybe first 8 months, there can be increase in the precious metal prices as far as gold is concerned. And then there can be a steep drop in the precious metal prices. So if you look at the Indian prices, it can go down right up to 89,000 to 93,000, but it can again fall back to 59,000, 56,000. So anything can happen in 2025. And my advice to all those who are trying to open more and more stores, be careful. The industry is not going to perform as per your expectation, and hedging is going to be the key thing in 2025. And while we have seen that most of the industry player hardly do any kind of hedging in the market.
Oh, well, okay, those are interesting big ranges that you're giving to us for 2025. Talk to us also about in sense of the global cues here. Yes, the markets are uncertain on what Trump would bring in with his presidency in the next year. But how are you looking at the global central bank buying, the investment buying, the ETF numbers, which we have seen positive in 2024? So if we are looking at so much of uncertainty and volatility in prices, do you see these categories continue to accumulate gold?
Well, I personally feel that initially for first 6-7 months, yes, central bank will continue to buy. There would be buying in ETF. But then I see after inflation, there can be a deflationary period. And during this deflationary period, the other markets will go down, which will take which will bring down even the commodity prices like gold and silver. So the gold and silver prices will be basically driven by the other market. So you can understand once there is a deflation, what happens is that people will have purchasing power, but they would still expect the prices to fall. So there would not be any buyers, and probably some of the policies of the US government might offload some portion of their gold also. So I don't see a very bright future for gold industry in 2025.
All right. You've said that thrice already in last 5 minutes. One final question then. Last year, the way the prices were rising, we saw investment demand come strong. A lot of diversification in gold was also happening. We saw a lot of financial experts tell us that 10 to 15 to 20% of your portfolio in gold is also fine. Would you change those numbers for the coming year?
For first 6 months, no, I won't change this number, but for the next, but I think one should offload initially in the first 6 months, then probably start buying towards the end of November, December. So that is my key, because I personally feel that the gold prices after 2025 may go up higher, but there would be definitely a buying opportunity for $2,100 to $150.
And any final sense on silver? Would you rather buy silver then?
Well, silver is going to be much worse than gold. The silver can go, in my opinion, as high as $49 to $52 in the first 6 or 7 months, but it can come back to $23, $25 by the end of December 2025.
Oh, wow, gosh, that is very, very big ranges coming in for gold and silver. So clearly, if you thought 2024 was volatile, well, you haven't seen anything yet, with the kind of numbers that we are getting thrown at us for 2025 are really bigger there. Thank you so much, Mr. Mehta, for joining us. Well, that's all the time that we have on the show, but stay tuned because Business Lunch will take all the action ahead.